Yo, what's going on, my fellow wealth creators? Matty Eyes here. So this is going to be a really fun video, at least for me anyways, because the mutually owned life insurance companies that I have my dividend paying whole life insurance policies with, so I can implement infinite banking, have just announced record-breaking dividend payouts for 2026. It is definitely one of my favorite emails to get all year, seeing that dividend paying, that payout come in and watching my policy grow, watching the cash value grow. My policies are actually pretty significantly starting to outperform. It's going to continue to do so because of the additional paid up additions that the dividends are able to buy. And that's just going to continue to snowball in a positive way. And it's just another example of why saving and storing capital with mutually owned life insurance companies in these policies is just so powerful, because it's basically my private banking system growing every single year, regardless of what's happening in the markets, regardless of what's happening in the political arena or in the economic environment, stuff like that, right? It's like these companies have weathered every possible financial storm you could think of. I mean, these companies have paid dividends through the Great Depression, the Great Recession, both world wars, every war. The 2020 pandemic, the savings and loan crisis. It's like these companies, they're the most financially sound and solvent companies on the planet. Like they've never missed dividend payments throughout all the chaos over the last 120, 150 years. So I can't think of a better place to save and store long-term capital, not replace investments. We'll get into that later, but to save and store capital for the long run that's going to compound for the rest of my life and gives me access to liquidity so I can continue growing my business. I can continue building wealth like I normally would, making different investments, right? It's not an either or scenario. Because we have access to the cash value in the form of policy loans, we can build wealth in two places at once. And that's not what this video is about. I'm more speaking to just the power of setting up basically our own private banking system with these policies, with these mutually owned life insurance companies, because of how powerful they are financially. And they're very conservative with their general funds, and the actuarial science, they've got it down to the actuarial numbers. They've got it down to a science, and it's just they're very consistent, right? So I can't think of a better place to save and store capital. It's just freaking awesome, guys. So I want to share this really good news with you. I love when dividend payouts come out and I get these emails. It's just really exciting. It's very cool stuff. So record-breaking dividend payout for policyholders in 2026. These are the emails that I just received. Let's see. This one's from Lafayette. This is who I set my first policy up with. All right. Approves a 2026 dividend scale increase to 5.9%, increase of 15 basis points to 5.9%. That is awesome. I started my policy when it was 5.2%, and that's actually what I illustrate. So if you were interested in getting a policy with Lafayette, for example, the illustration I would run would be the dividend scale at 5.2%, just to be extremely conservative. That way our policy kind of automatically outperforms. But this is, you can't ask for really anything better. 5.2 to 5.9 over the last few years, expected to pay a record $136.4 million dividend allocation to policyholders. Another powerful testimony to our strong financial position. All-time high dividend payout. Marks the, look at this, guys, 121st consecutive year, unbroken since the company's founding, that Lafayette Life will be paying out a dividend. Like I said, they've paid dividends regardless of what's of the amount of chaos and turmoil that takes place in the markets, in the political arena, in the economy, and all this stuff. They just keep trucking along. Boring old whole life insurance. Who would have thought, right? And it's just awesome. And here's the next one with One America. This is who I have my second policy with. 2026 dividend announcement. Let me see. Can I see if I can zoom in here a little bit so you guys can see better? There we go. Sorry about that. All right, we're excited to announce they've approved a record-breaking dividend payment of $42.5 million. So it's lower than Lafayette, but this is primarily because I believe One America just has, there's probably more factors than this, but one of the reasons anyways is because One America has a higher guaranteed rate within their participating policies at 3.25%. Lafayette is at 2%. So that just means that Lafayette's going to have a higher surplus amount. typically. But I mean, I'm oversimplifying it, but that's one of the reasons in case you're wondering why this is lower. All right, this is the largest dividend payout in our company's almost 150-year history, guys. I mean, who better to save and store capital with than a company that's been around for 150 years and has never, ever, ever missed a dividend payout. That is just freaking awesome. I absolutely love it. All right, so what I want to do next is show you some comparisons. Actually, we'll go through the announcements here. I wanted to show you this, like the policyholder dividends here. It just continues to grow. Now, the dividend amount going to continue to increase? I actually think so. Will the dividend rate continue to increase? Probably not, because we're seeing interest rates starting to get cut, and these dividend rates, interest rates tend to follow overall interest rates, like the 10-year bond, 10-year Treasury bonds, or 10-year Treasury rate. Moody's Corporate Bond Index, it typically follows that pretty close. But that doesn't mean that the amount won't continue to grow. Right. But anyways, I mean, you can just see this nice, steady dividend payout. And that's what you want to see as a policy holder. And, it's also the difference between, a participating dividend paying whole life insurance policy set up for high cash value versus the traditional 100% base whole life policies that Dave Ramsey likes to rag on, and other influencers that say it's a horrible investment, terrible place to put your money, blah, blah, blah. All right. They're not talking about these specific types of custom designed whole life policies that are fantastic alternatives to savings accounts, CDs, money markets, even bonds. I think bonds are just kind of useless unless you're doing like maybe 1 to 3 month treasury bills for short-term, capital storage. But, that's after we have our private banking system and our foundation set up with these whole life policies. But, this is the difference, guys, is we get to participate in this in the profitability of this company, and it continues to grow every single year because they're just so good at what they do. And you can see here, gets again, the policy gets increased to 5.9%. All-time dividend payout marks 121st consecutive year that they've paid out. I mean, it's just so freaking powerful. And then this right here is really impressive for 2026. So this is One America. We are pleased to announce, I'm right here. Let me see if I can let me zoom in a little bit again for you guys. All right. For 2026, pleased to announce a dividend payment of more than $42.5 million, a 17% increase over the 2025 dividend payment. I'll take that. Thank you very much. All right. Driven by a 10 basis point increase in the dividend rate. Now, One America does not post or share or declare like a specific dividend interest rate. That's just not what they do. I don't really mind it anyways, because these are gross numbers, guys. So like when you see that 5.9% with Lafayette, that does not mean my policy is going to grow by that much. It's just a gross number. And then they deduct expenses, mortality costs, like death benefit claims, and like just the overall costs and expenses of the company. And then whatever's left over, that gets paid out to the policyholders. But I mean, it still translates to a really good payout, right? The 17% increase. Are you kidding me? That is insane. Now, I haven't received my dividend for One America yet. I get that at the end of, it's like mid or end of February coming up. So make sure you subscribe and stay tuned for that, because I am going to be doing a video comparing the amount of dividend that I was illustrated to get compared to what I actually get, which is what I'm going to do for One America, which is what I'm going to do now for Lafayette, because I have received that dividend. Actually, I haven't received the increase. I just received 2025, like for my calendar year anyways, that dividend. So my next dividend is going to be even better, right? Because this dividend was done at, 5.75%. Now my dividend rate, interest rate is 5.9%. So my next dividend is going to be even better than what was originally illustrated. But this is the one I just received. All right, so you can see here, my total dividend this year, this was for the calendar year of 2025. All right, that's when I received it. It was October 27th this year, 2025. All right, so my total dividend was $6,146. That is freaking awesome. That almost covers my base premium at this point. So I could technically, if I wanted to at any point, I could do a premium offset and my dividend will cover my base premium, like the minimum payment I need to make for the rest of my life. Assuming that the company continues to pay dividends, which is not guaranteed, but they've always paid them, right? That's a really good position to be in. All right, but check this out, guys. Here's my original illustration for Lafayette. And you could see what the projected dividend was going to be. This was at 100% of the current dividend scale, which was 5.2% when I set up the policy. Now what I do is when I run illustrations, I will scale down. I will lower this dividend scale to like 93 or 95% of the current dividend scale. So it brings it down to basically Lafayette's lowest dividend rate, which in its history, which is, I believe, 5.2%. So we illustrated the lowest dividend rate, but it's sitting at 5.9%. So what you see, you're actually going to outperform a lot of what you see when we run illustration now. But anyways, the point is, this is the dividend that I was supposed to get at the end of year 2. This is when the dividends get paid out. So the one I just received was for the end of my second year owning the policy. It was supposed to be $5,414. Wait a minute. What? How much of a dividend did I get? 6,100? 6,146? That's like almost $700 more right off the, like, already in year 2, guys. And now the dividend rate has increased yet again. So my next dividend for 2026 was originally illustrated to be 6,355. Well, I'm already close to that by the end of year 2, and they just increased the dividend again. Now what? Now what is my dividend going to be? And like, how much is it going to outperform? Is it going to be $1,000 higher, $1,500 higher? I don't know. I'm excited to see it. It's really cool. Obviously, this accelerates the wealth building process within the actual private banking system itself. Anytime you can get just a little bit of outperformance can make a huge difference. And we're not talking about like, really sexy returns here, right? 5.9% dividend when you can get 12% every single year in mutual funds, like Dave Ramsey likes to think you can. All right. So it's not sexy, but it's a really good foundation, guys. And I have access to all of this capital, my net cash value. Like I'm actually, let's head back here because there's some final thoughts that I want to share that I think are really important. All right. And it just speaks to the power of this type of financial foundation with these policies. I have access to all this cash value. And because my policies are outperforming, that means I'm going to break even that much faster as well. Because I'm still new to, like, I just ended the second year of my first policy. When I get in February 2026, that'll be the end of the second year for my second policy, starting my third. Right. So I'm still kind of early on this, but it's just like they're already doing so well. I'm going to break even a lot faster. So both policies are outperforming. All right. I should break even a year early on both. So I'm going to be very close to breaking even by the end of this third year for my first policy. I was supposed to break even like between years 5 and 6 with One America. I imagine with the outperformance of the policy, it'll probably be between years 4 and 5 now. Right. So we're getting closer to that break even point a lot faster. And guys, this is like, it's hard to describe the peace of mind that you have when you create a financial foundation like this, that's just compounding regardless of what's happening in the market. Like, I'm able to make my investments so much more confidently and strategically from a place of strength because I have this foundation that is just continuing to grow. Regardless of all the chaos and turmoil that's taken place. So my private banking system just continues to compound while providing liquidity, right? I share this on my channel all the time. Like I'm closing in on my third deal for private lending on real estate. That should be done in the next couple of weeks. Of course, I'm going to do a video on that. And it was a really, really good deal. But my policy, like I got these dividends, I'm getting the dividend increase. My policy is continuing to grow while I use the cash value to build wealth like I normally would, earning wealth and building wealth in 2 places at once. Why on earth would I not do that? That just, I don't know. It seems extremely powerful to me, right? So I still have access. It's not like I'm locking my money up and I don't have access to it and I'm earning this terrible rate of return. No, it's actually getting a really good rate of return compared to what? Compared to savings accounts, CDs, money markets. Is it getting as good of a rate of return as gold right now or the S&P 500? No, but those are riskier investment. There's a different asset class, right? We're talking about a foundation here. Policy growth. Oh, here's what I'm really excited about too, guys. Is as these policies mature and they get more and more efficient, they continue to grow. Eventually, the dividend, like the growth of my cash value, will very easily cover any interest costs that I incur when I'm using it for real estate or purchasing vehicles, large capital purchases, whatever kind of investments that I'm making, doesn't matter. Even if even if I'm paying a higher percentage rate on my policy loan, because my policy is continuing to get more efficient, the actual dollar amount, the volume of interest that my policy grows by will eventually be far more than the volume amount, like the actual dollar amount of interest paid on any policy loans that I'm making, guys, or that I'm taking. So I'm getting close to that threshold, which is really exciting because it's going to make my investments that much better. Right. And then, last thing I'll say, I've kind of alluded to it already, is like, explain to me, drop some comments down below, guys. Why save and store long-term capital anywhere else? Name a better place to save and store capital. Don't talk to me about investments. All right. This is not an investment. This is a financial foundation it has guarantees in it. You have companies that have never missed a dividend payment. They take premiums, invest it very conservatively in their general fund. We're not talking about, taking risk in the latest, cryptocurrency project or mutual fund, whatever. Right? We're talking about a safe place to save and store capital and still have access to liquidity. Name a better place to do that. I haven't found it. I'm always open to learning, of course. So if it's out there, I would like to know about it. But I don't know anything more powerful, a more powerful place to do this. Like, it's just awesome. So anyways, I hope this was helpful, guys. Hope it got you a little fired up, right? I know I'm certainly fired up about boring old dividend paying whole life insurance, but it's not boring when you see those dividend payouts coming in and you see your dividend rates increasing. It's not so boring anymore. So would love to hear your feedback, guys. Of course, if you want to connect and see if whole life insurance is right for your financial foundation, I'll drop some links down below. I got a free Infinite Making Masterclass. I got a book coming out. I have a calendar link if you want to have a conversation about it. Happy to, help you discover if this is a good fit for you or not. But anyways, hope you guys are crushing it. And I'll talk to you in the next one. To your success, Matty Ice is out.